Now in today's market analysis, we'll be having a look at two pairs, NZD/USD and GBP/JPY. Now before we get started, I would just like to state that all content posted on this channel is for educational purposes only. Now the first pair we'll be having a look at is NZD/USD on the 4-hour chart. Now if we go back to roughly around June 2018, we can clearly see that we made this downwards movement and then was rejected by the 0.6826 level. We pulled back up, and once we run out of gas, we pushed back down through the through this level and entered into a period of consolidation. Now once we entered into that period of consolidation, we tested our resistance zone 1, 2, 3 times, and we tested our support zone 1, 2, 3, 4 times. Now on the 4th time of testing our support zone, we consolidated right here. We then managed to break through that support zone, push down. We pulled back up, testing our reversal zone, and was rejected by that zone. We then entered into a downwards phase where we tested our downwards trend line 1, 2 times. Now on the 3rd time, we failed to make a lower low, and we pushed back up and consolidated just above our downwards trend line. We attempted to break back through, but we failed to do so. So we then pushed up through our reversal zone and tested our resistance zone right here, roughly around the 0.6797 level, and then pushed back down to our reversal zone. Now if we look here, we have a look at our Fibonacci retracement tool from swing low to swing high, we can clearly see that this pullback right here and this rejection on the reversal zone clearly lines up with the 50% retracement. I don't know if you can see that. Now if we also go down to the hourly chart, we can clearly see that we had a nice double bottom forming right here, and I saw this as a great opportunity to enter. Now this trade was on a 1 to 1.5 risk to reward ratio, and because of all of this, I saw this as a great opportunity to enter. Now I am roughly about 39 pips in profit, and I had I think a bit more. I'm roughly around 40 pips in profit, and I have my target set at 0.6783, and my entry was at 0.6717, along with my stop loss, which was at 0.6673. Roughly 40 pips in profit, as I said. I'm gonna let this run. I will let you guys know how this trade plays out during the week. But for now, let me just run you through the fundamentals on why I took this trade very quickly. Now, Apple and Goldman Sachs shares both fell, along with the Dow that fell 600 points. Now, Apple shares fell by 5%, and I'll explain why. Lumentum Holdings is a supplier of one of their components. I believe it is the Face ID components. Lumentum Holdings fell by 30%. Now the reason Lumentum Holdings fell by 30% is because Apple placed an order, then decided to reduce their order by a large amount. And because of that, Lumentum Holdings had to cut their earnings, and they fell by 30%. And that also caused Apple to fall by 5%. And then all of those factors considered, along with my technical analysis, the double bottom forming, the rejection of the 50% retracement, and the rejection of the reversal zone, I saw that as a great opportunity to go long. As I said, I will update you on how this trade plays out, but for now we will have a look at our next pair, which is GBP/JPY as mentioned. Now here we have GBP/JPY on the daily chart, and here we can clearly see we have our base upwards trend line. with our double bottom formed right here. And we have our, well, what I like to call my key reversal zone right here as well. Now we can clearly see that we tested our key reversal zone as resistance 1, 2, 3 times. 4 times, sorry. And we tested our reversal zone as support 1, 2, 3 times. Now after that, we managed to break our upwards trend line and come down to roughly about the 14323 level, then push back up to our reversal zone, but we were rejected. We then pushed back down and formed a double bottom once again here, pushed back up to our trend line, couldn't break through it, and was rejected by the downwards trend line. Now what we did here is what I like to call enter a period of consolidation. Now once we entered that period of consolidation, we did have a false breakout right here. We tested our support zone 1, 2, 3 times and our resistance zone 1, 2, 3 times also. Now, if we zoom in just a little bit, we can clearly see that, again, if we grab our Fibonacci retracement from swing low to swing high, we also had a clean rejection of the 50% retracement level. Now, I did enter into this trade quite late, which I wouldn't usually have done. I entered in at the 38.2% retracement level instead of the 50. I did hit take profit on this trade already. It was also a 1 to 1.5 risk to reward ratio. It does say 1 to 1.6 here, but yeah, I did hit take profit, and just like before, I'll run you through the fundamentals on why I took this trade very quickly. There was an article released on investing.com stating that the Japanese inflation rates were too high and were not sustainable for long. Now, when inflation rates are too high, interest rates tend to be pushed up. Now, there are a lot of benefits and disadvantages to raises in interest rates. Now, raising interest rates would mean that less people would borrow money, as it'd be more expensive to do so because interest rates have been risen. Now, the Bank of Japan hold what I believe is 45% of government bonds, and government bonds are inversely proportional to interest rates. So as interest rates have risen, government bonds have also fallen. Now, as well as, just like before, all factors considered, along with my technical analysis, I saw this as a great entry on the GBP JPY daily chart. We did hit take profit, a 69 pips profit on this trade. Yeah, as I said, I will try to keep you guys updated on how my trades go through in the week, along with my NZD USD position. But that's it for now. So please like, subscribe, and comment. Thank you for listening.